Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woo, party! Started a few minutes late here this morning. Sorry, everybody. We're just trying to get our head on straight with this new Google Meet and all that. And we have a bunch of cool presentation material here for you this morning. So we wanted to make sure that Jamie was going to be able to kick butt here this morning. So why don't we start with some introductions? We have the mayor of Vienna still on the call. He's heading off to USC land soon. But how you doing this morning, Mr. Mayor?
Hey, sir. Greetings from LA, I guess. I'm pretty good. How are you?
Awesome. Awesome possum. Great to hear your voice, as always. I don't know whether, Kevin, you have a microphone or not. I think you do. But Kevin's going to be helping out when Alex is off having fun with the university students. So, Kevin, why don't you say good morning to everybody?
Hey, guys. Good morning.
Hi. Great. How you doing this morning?
I'm doing great. Thanks.
Excellent. So Kevin's going to be helping me out, and I think we're on a good footing here heading forward. And this morning we've got the UK. I don't know. We got to think of a funny name for you, Jamie. But anyway, the fundamental analyst gonna give us some awesome macroeconomic top-down view this morning. Jamie's here. How you doing this morning, Jamie?
How are we doing, guys? All good. All good here. I've caught my breath after the last couple of weeks. It's been nice and crazy, so I think we have plenty to talk about today.
Awesome. So we got a chock full episode. I don't know whether we need to. I think actually I'm feeling like maybe we should just maybe kick off with Jamie's presentation. And if we do have some time afterward, take your time. There's no hurry. But if we do have some time afterward, we'll take a look at the broader market and see if there's anything kick-ass moving that we need to mention. People are asking for the YouTube link. I got to figure out how the heck I do that. Bear with me here a second. I think I click on...
I'm just going to take in that.
Okay, thank you, sir. I've clicked on the page. If you have any problems accessing it... Oh, that's interesting. That didn't load the correct page. Hey, there you go. You did it. Way to go, man. Thank you. Appreciate that. Okay, so Jamie, let's first off see whether we can present you to the group. So I got to figure out which button to push here. I do believe you've got the screen share function working. Where are you, Jamie? There you are.
Yeah, I've just enabled it, so...
yeah, and it shows that you are presenting to everyone, so I think you're good to go. Have some fun. I'm going to take my screen share off just to make sure I'm not overwriting you. Let's go stop screen sharing. All right, there we go. So I see your screen. Take it away. I'll put myself on mute and tell us what's on your mind.
Don't put yourself on mute. I think we're going to be having lots of conversation today. How are we all doing? Hope everyone's all well. Standard procedure. I think what we'll do today is, as usual, we'll go over the last couple of news events over the last couple of weeks, which has been going on. Then I saw that you actually put onto the chat about some blockchain stocks. I thought I'd have a look at a couple of them just to see any changes really. I mean, I haven't really looked much into many. I usually only look at one at the moment, but I thought I'd have a little look at any new ones that have popped up or anything. So I thought we'd go over a couple of blockchain stocks, and then we'll finish off with the next 2 weeks of the macro events. So yeah, please chime in as much as you can because so much has gone on over the last 2 weeks. So apologies if I miss anything, but it's been one crazy ride to say the least. So we'll start with the reports of the last 2 weeks. So the ISM non-manufacturing index down from forecasted 55.5 to 53.7. I suppose we can definitely would have expected that to happen since the manufacturing index It's obviously been falling down rapidly and is well below 53.7. So services industry still doing better than manufacturing in general. But yeah, we're definitely starting to see a lot more slowdown now, and we're starting to see that as well within companies' earnings calls. Canada. So if we look over at Canada, man, apologies. IGPMI down from 55. Forecasted at 55. Actual was 54.2. So.
But that actually ticked up. That actually surprised me. I don't know whether you saw Canadian. I don't know whether you saw Canadian jobs numbers, but they are going absolutely insane here right now. So.
I haven't had a look at anything going on with Canada, but I mean, if the jobs numbers are looking good as well. I mean,
yeah.
Clearly, something's working over there. It'd be interesting to see if any weakness has creeped in yet from America and worldwide. I suppose more importantly, who's the biggest export and import of for Canada? Is it? I presume it's America.
Yeah. Basically, Canada is the United States' supermarket. So we do about 80% of our trade here. But just check this out. I'll show. I think I can just quickly show this. Let's see your entire screen. Okay, so I don't want to take away from you, but I do want to show just these staggering numbers because it actually it really surprised me. So I'll just quickly pop over here. I don't mean to steal your thunder.
No, please show us the data.
But look at this. I mean, this is crazy. U.S. ADP employment change. It was forecasted to come in at 28,000 new jobs. The previous report was 30,000, and it came in at 73,000. So, like, literally almost like triple what was expected. Just a staggering number. I'm not even quite sure how to interpret this. Because usually the benchmark is the Canadian economy is about 10% the size of the U.S. economy. So what that literally means is, think in the United States, if you had a monthly jobs report that came in showing 730,000 new jobs created in the States, they'd be going crazy right now, eh? So I don't know what the hell's going on here, but wow, that's a big jump. That's quite surprising.
Enjoy it until the next report.
Well, I'm sure there's going to be revisions. That wouldn't surprise me. But anecdotally, there's an interesting seed change going on here in Canada. I would argue too, with the Canadian dollar being as weak as it is, things like manufacturing jobs and stuff down in Southern Ontario are starting to come back a bit. I think we have a couple people from Southern Ontario in the call. I think. Matt, you're. I thought I saw Matt in here earlier. He's in Southern Ontario. I know Colin. I think you're in Southern Ontario. Be really interesting to see what sort of the economic sentiment is there. And then, of course, we have just this insane building boom going on here in BC. So, just looking at the jobs data, the interesting thing for Canada is that this is going to make it very, very hard for the Canadian central bankers to lower interest rates in the face of this kind of insane employment number. So, anyway, my apologies for interrupting, but that just sure jumped out at me.
It's always great to get different opinions from all over the place, but I mean, I really don't have a look at the Canadian economy, if I'm completely honest. So.
Oh, you just like making fun of me. And my funny accent.
I just pop in once every 2 weeks just to practice my Canadian.
All right. Okay, so when I click on your icon, I'm not sure if I've got this correct or not, but it might be because I screwed up that screen sharing. But what do you guys see? Do you see macro news reports recap of the past 2 weeks? Do you see that on the screen?
We're still on your.
Okay, so I've messed this up. My apologies.
Hang on, I think I've got this. Okay, how's everyone looking now?
Jamie is presenting. I just have to make sure that I'm doing the right screen here. Give me a second here, just a moment, please. OBS, I gotta go to OBS. All right, there we are, and then I'm gonna plunk this right over here. Okay, sorry about that, guys. Go ahead, please, Jamie.
It's no worries, it's new to me as well. I have to press resume presentation, so I have to swap it as well manually. So yeah, I mean, yeah, so much has gone on over the last couple of weeks. It's hard to keep on top of every single country of what's going on. And the majority of my positions, anyway, my portfolio is predominantly US driven anyway. So unless a company is specifically exposed to the Canadian economy, then there's no really need for me to have a look, I suppose. Right, so China. The exports year on year for July actually did better than forecasted. Take that data however way you want. It is Chinese data, so always take it with a pinch of salt, but it was up 3.3%, and imports were actually better than expected. Forecasted was minus 8.3%, but up minus 5.6%. So obviously the volatility over the last couple of weeks have been crazy, so that actually stabled the markets, I think, for a day after that data came out. We then had the UK GDP preliminary results for Q2. So the preliminary results are looking like that we will be contracting for Q2, so minus 0.2%, forecasted 0%, but it looks like that the UK economy is going to be contracting. So, I mean, no real surprises there. I mean, I suppose, you know, if we look in terms of everything that's going on within Europe, I think it's pretty impossible to try and escape everything. Never mind the actual sentiment of what everything's going on in the Brexit at the moment.
Jamie, I don't mean to cut you off. I apologize. We are getting a couple comments. Is there any way you could put the microphone a little bit closer to your mouth? I don't know that that's possible or not.
How are we looking now? Does that sound better?
Well, we'll try our best. Just some feedback. If there's any way you can maybe get the microphone a little closer, it would probably help. So, just an FYI. And I'll put myself on mute. People are saying that my keyboard is louder than your voice. So I'll put myself on mute. Sorry, everyone.
Yeah, no worries. Which up is that? I believe I should be connected to my... yeah, sorry guys if it's not too loud. Yeah, so Chinese industrial production year on year. Actual 4.8%, forecasted 6%, so just a little bit down. And then, of course, Germany's GDP as well, preliminary results for Q2 also in contraction, so minus 0.1%. I mean, can we really be surprised? Not really. I think the last couple of weeks has been a wake-up call, I suppose, for the markets. They've all been ticking along rather nicely, and it's only now that all of a sudden the giant has woken up to reality a little bit. The other day, so retail sales up 0.7%, 0.3%, which then kind of stabilized the market, to be honest, the other day. And then the US building permits was up 1.3 from 1.27 forecasted. So all in all, lots to read from that. Obviously, you know, I thought we'd go over some of the highlights of the last couple of weeks. So the last presentation, obviously, I actually showed this very simple macro indicators, just a graphical representation of some of the main indicator reports that I like to look at during a business cycle. And when it came to the dynamic yield curve, so on the white line here is basically when I was here 2 weeks ago, and then as you can see, the yield curve had a nice little flattening scenario. So your orange line is the 10-year yield curve, blue line is the 2-year yield curve. So the yield curve, 2-year yield curve did invert for 1 minute exactly. So, I mean, read what you into that personally, we'll see. I mean, it's bounced back now over the last few days. So, I mean, yeah, it's a pretty crazy scenario of everything that's been going on. We'll see. As soon as the market heard government scream out stimulus, fiscal stimulus from Germany and from other countries, it seems like the markets are stabilizing now, thinking, oh, it's okay. Governments are going to print money. It's going to be fine. Only time will tell to see how that will play out. But yeah, I mean, any comments from you over the last couple of weeks, Brian, about anything at all. I mean, where to even begin? I mean, from whether it's from China to Hong Kong, everything going on with Iran at the moment. Obviously, Europe as well. If we're looking from continent to continent, Europe is obviously slowing dramatically and has been for a while now. And I mean, when I've been researching different companies, I mean, within nearly every earnings call, all you'll hear now is either an effect from China, currency pressures. A lot of companies now are starting to talk about reducing their inventories, or can't even reduce their inventories because other companies that they depend on buying from are destocking themselves. So it seems that, it seems that things are starting to slow down quite rapidly at the moment, but, things can change quite quickly. But I think it's definitely a time just to be very cautious within the market. I think we're going to see volatility quite a lot now for the foreseeable future. So for anybody out there who does trade CFDs or any leverage at all, just be very cognizant of your exposure. If volatility does move up, you're looking at the VIX and the VIX spikes, or you think the VIX is spikes, just reduce your positions, just keep peace of mind, because as soon as volatility doubles, well, in theory, your risk doubles at the same time without you doing anything. So just keep an eye on everything that's going on. But yeah, anything you want to comment on that you saw over the last couple of weeks, Brian?
These they call these the dog days of summer. The end of August. Usually there's, keep in mind most of the pros are in the Hamptons and all that kind of stuff right now. So you often get these pretty wild swings in August. We'll know for certain what this sort of market is feeling after Labor Day. So the next couple weeks should be kind of how would I best describe it? A lot of amateurs trying to push the market around, but at the end of the day, the pros just simply aren't here. Lots of volatility. I think probably a lot of the market kind of got caught napping. We were talking, I guess, a couple weeks ago about things being very, very quiet on the volatility side, and then all of a sudden things spiked up dramatically there. So I think on balance, it's pretty much business as usual. I've made the comment repeatedly of late that I think that the U.S. economy itself actually probably does the best out of this upcoming sort of slowdown, and in the U.S. I think they're actually calling it our earnings recession, not an outright recession. I still think that we should follow Mr. Murphy's really good tool on judging the yield curve. I personally don't think the yield curve has inverted yet. I think there's a lot of head fakey talk in the market, and that might encourage people to be thinking recession, but actually I saw a couple write-ups. Some key economic advisors and stuff are looking for the stock market to continue higher into 2020. So I think that it's majorly problematic for countries outside of the U.S. But at the same time, too, I mean, like I showed you with that Canadian data, if you're directly related to the U.S. market, they're sort of in the sweet spot right now. I think they're doing pretty well. I was watching, geopolitical issues, things like what's the situation in Hong Kong. That's sort of got my attention. Does Asia start spiraling into disaster? It's tough to say. But I'll be watching that. The econs specifically coming out of China and Germany are pretty darn weak, but it seems the market, the Germans have said that they're going to throw like $50 billion at their economy this morning, and I think that's one of the reasons why the stock market was sort of uppy today. In that, I think, and you mentioned that, these governments are prepared to throw buckets of money at the market to try and keep things up. I think probably, and I don't know whether we want to do this after your presentation or not, but what's the market's focus this week? We have a pretty significant event for central bankers this week.
Yeah.
In that they all get together in a place called Jackson Hole, Wyoming. And they all have a central banker party, which you can imagine is probably pretty boring. But Mr. Powell is expected to speak there, and everybody's going to be just waited with bated breath. Does he say anything about interest rates? And my hunch is he won't. But I think that's what the market's going to be focused on this week.
Yeah, agreed. I mean, and then even if he did speak about interest rates, I mean, will talking about cutting interest rates, would that really do much to a market where in general the whole world is slowing for something so?
Yeah, I think we saw that the Fed funds futures and all that, they're predicting I think like a 50 basis point decrease in interest rates over the next few months. I think what I read this morning, people were sort of anticipating him making some sort of reference to that. So, I suppose if he comes out, and it's interesting to see, like, stock market's ratcheting right back up to the top end of its range again here now. And if we start, getting up and pressing new highs, I could very easily see him like throw a bucket of water on this market and say, maybe we're not going to cut that aggressively. Only time will tell, but all right. I don't know whether that helps at all, but that's...
No, yeah, definitely, of course. All helps. Everything helps. But yeah, I completely agree. I mean, it's very difficult at the moment, especially with, some companies that are definitely driven towards consumerism within the US are definitely doing very well. I mean, if you look within reports, it's looking like at the moment that, as weird as it sounds, accommodation and food services are doing relatively well in the US. Whereas when you're looking at companies that are a lot more dependent on the world stage, so when we're looking at whether it's EMEA or whether you're looking at China, companies are definitely struggling when they're dependent on other continents. So it's definitely something to keep in mind. I think just be cognizant of obviously the sector you're looking at, whether it is a consumer-driven sector, or even just look at recent reports of which sectors are reporting growth in specific parts of their business. And then as well, yeah, definitely the geographic breakdown of the company that you're about to have a look at, I think, is incredibly important. So, yeah, good point.
Like we bought a steel manufacturing company out of the UK. It's for our little TRI SOF group. We picked up some options on it, and I'll tell you, UK stocks right now, oh boy, it's a tough slog over there.
Yeah,
and has Boris been officially named king there yet?
Boris is prime minister now. Yeah,
he is.
King,
so
King
I heard there's like some sort of no confidence vote or something like that coming up here soon.
I'm honestly not sure. I don't think so. I think it's a case of they're going to try and block. Johnson being able to be able to put through a no deal.
Okay.
But I mean, to be honest, I briscoe for everything now within the UK. I'll wait until maybe a week before October, which is when the date is for us supposedly leaving. So I mean, I think Boris Johnson now is going to be meeting up with Merkel and the EU squad. I think next week sometime. Mm-hmm. So it'll be the classic comment of Johnson's will say we're going to have a no deal, the EU saying they're not going to budge, and it'll just back to square one again, rinse and repeat. Basically what we've heard for the past 3 years. So to be honest, UK markets I never look at other than housing. So I mean, other than that, there's no need to look at anything, to be honest, because as you say, not a hell of a lot is going on. I mean, I mean, looking from a demographic perspective, I like your generation cycle that you do that. I remember you showed me in level 1, and let's be honest, Europe is doing exactly what the the generational cycle should be doing.
Yeah.
The US is obviously taking a different stance on it, and it's obviously just gone up and up and up. But yeah, I've just been looking at the US. I mean, how can you not? And especially the information that you can get about companies, about anything at all in America. It's just like, here's all the information. Now go and jump through it and have a little read. So yeah. Anyway, I'll carry on because we're half an hour in already. So
Yeah.
So I thought I'd basically go over just a couple of blockchain stocks, just to update people on ones if they're looking at specific ones. If anybody has any blockchain stocks that they look at, then I mean, if we have 5 minutes at the end, I suppose we could have a quick look. I genuinely just look at the fundamental side before I even look at a technical analysis side of the stocks, because it's very difficult with these blockchain stocks at the moment. Some of them don't really report, some of them are suspending things, and obviously with the cyclical change that we've had within the crypto industry, some have obviously on the debt levels are ridiculous. Yeah, so I thought I'd go over the first one, Hive Blockchain Technologies. So Canadian-based company, I'm pretty sure most people will be familiar with this one of the largest ones within Canada. They don't just mine Bitcoin, but they mine Ethereum too, and other types of other cryptocurrencies as well. The things that have changed from the last time that I think I would have presented them quite a while back, that they've had a falling out recently over the last couple of months with their main partner, which is Genesis Mining. For people who don't know Genesis Mining, they're one of the largest mining firms in the world, but obviously not listed. So a lot of things are going on within Hive, which would probably explain the share price, considering usually they have quite a high cyclicality with the Bitcoin price. So
I just don't like the amount of shares out on this thing. Just really bugs me. I don't like the amount of shares that they have out on this thing. I think it would be better if they...
as Brian's pointed out, 327 million shares outstanding.
I think, like, I'd love to see them roll it back 10 for 1. Stock price goes back to $3 a share. And then I think, you know, we could do something here.
I mean, it's a very difficult one, especially what's gone out over the last few years. So in the news and events and changes, as I put at the bottom there, you know, they haven't filed their annual financial statements for a very long time, which has then made management they filed the commission to the commission, so management can't actually trade their shares until annual filings have been completed.
Yeah.
So there's a lot of negativity within this one. So for anybody who has been looking at it but hasn't had a really good deep with the fundamentals, there's a lot to go through here, which isn't the greatest thing. As you can see at the bottom, Genesis, the partnership now, they've disposed of 6.6 million of their common shares from Hive Blockchain Technologies. So clearly, it's not the greatest thing to look at. My advice would be, if you were interested in this stock, just wait until the annual filings would come out, just so then at least you can have the sense of where the company is at, as a lot of these blockchain tech companies don't really don't release their earnings on very like not on a quarterly basis. They do it usually once a year.
That's not a good sign.
Sorry?
That's not a good sign.
No, definitely not. So this is Hive Blockchain Technologies. We'll go to the next one. So one that I personally keep an eye on, which is Hut 8 Mining Club, which is another Canadian base. These are actually the largest miners in North America. So
Stuart loves these guys. The guy who runs this company is Dutch. So this is exactly Stuart's bread and butter. He lives here in Canada. He lives here in Vancouver locally.
Oh, nice. Okay. Well, there is. I mean, to be honest, so far, with everything that's gone on with Hut 8 Mining Club, they're very, they do release their financial statements. They do release. They're very communicative with shareholders. So I mean, that's a good thing. They even hold earnings calls now and again, which is always good to hear. They have a partnership again with another large company, which is Bitfury. And the difference is that Hut 8 actually solely mine Bitcoin. So if you are just a Bitcoin thoroughbred, then I presume this one would be the one for you to just keep an eye on. Hut 8 like to have a stance where they like to say, okay, well, if you don't want to physically own digital currencies, well, if you're more comfortable with the stock market, buy Hut 8 mining, because they try and say that they have a high correlation with the BTC price, which you have to take with a grain of salt. I mean, it's not exactly, it's not that much correlated, but they've released a quarterly earnings the last month, I believe. So we got a good insight of basically how they're getting on regarding, all their financial statements. So they've mined 2,816 Bitcoin just in the last quarter alone. So definitely a lot of firepower behind them. I believe it's something like 85 megawatts they mine. Production cost at the moment is actually at the lowest that it's been for them personally, so $2,757. So for that, for people who have been trying to look for a production cost for BTC, Hut 8 mining would probably be the best one to look at. I'd look to have a look at the difficulty. I haven't had a look at the difficulty for a while, but apparently 2,757, which is an improvement compared to Q1 2019, which is 3,950. So yeah, definitely interesting one to look at. And then one which I came across very recently, but I'm still waiting for some annual statements for this one, is Kryptonite Blockchain Technologies Corp. This would be something that you'd love to have a little look at, Brian, because I know you love your like DPW. I know you like to watch DPW. You can tell me what's going on there too. But so with the Kryptonite blockchain, they're basically starting their own they have started their own exchange application for mobile, and they've got a couple of other things that are coming out. So they've trademarked BitPass file for a new product launch. Still waiting on a new financial report. I think very, very small cap. So as you can see there, $2.3 million US with just 56 million. So maybe you'd be happy with 56 million shares. But yeah, maybe one to look for in the future, as there aren't any exchanges really that are publicly listed. So, if people don't really have fancy having a look at mining companies, then maybe this might be one that you want to delve into and just have a little bit more of a view at, which is, if you're more looking at exchanges, maybe that you'd like to have a little bit of exposure into. So yeah, which ones have you been looking at? I know you like to look at DPW. I saw that there was an article, but I didn't have time to read it. It was, do you want to fill me in? Fill us all in?
That company you were just talking about a moment ago in Canada, I think the symbol is Knight, if I'm not mistaken. Anybody who's in Canada wants to look that up. I don't know whether this is CNX. I don't know whether that means that it's the Canadian Venture Exchange or not. I'm not quite sure. But I'll definitely take a look at this. I'm not familiar with this one. I did have on, and I don't know if I can do this or not. This might get messy, but I will try and share. I guess it was this screen. There's a bunch of really interesting ones. I don't know whether, this is an interesting one, that Marathon Patent Group. You can see how it's come right off.
We're still on Jamie's screen there.
Okay, I am showing on YouTube. It's showing that that marathon, so it might just be the Google,
okay, got it. Sorry,
Google Hangout. There is the Hangout. So when Jamie's presenting, just over there. So I think I'm presenting this screen.
It doesn't show on Meet though, so.
Yeah, I know. That's because I'm not presenting. So hold on a second here. Let's see if I can do this. Your entire screen. I think this is the one I want to do. And there we go. So there are a bunch of really interesting names. Here's that Hive. Also, too, this Riot looks really interesting in here. Do you follow that Riot? And I
Yeah, it's an interesting one because, I mean, from a revenue point of view, they hardly make anything yet. Obviously, as you can see, the stock is relatively liquid compared to other cryptocurrencies. So maybe blockchain tech stocks. So maybe I will have a little bit more of a delve into it and see what's truly going on within this company. But as you can see there, like you say, start 2019 looks very nice if you had a look into that.
So here, I haven't looked at it per se, but here is that night and see me. Oh, jeez, I don't know why they're not giving. I can't get detailed data here. Yeah. This is one thing I hate about the damn internet is they're constantly changing shit. Just leave it alone. It worked perfect before. Now I can't get anything now. But if we look at this Riot, and of course, guy like me, what I'm most interested in is let's see if this will load up. It might not. Actually, I think, I think I have this on Finviz, because it's a U.S. company. Yeah, there it is, Riot Blockchain. So you can see right down at the bottom end of its range. Interesting descending wedge here. Technically, that should be bullish. And this is what I really like, is I want to see, nice 20, 30 million shares out. That's sexy. Streets targets $5. Some insider ownership, not that much. It looks like they're trying to earn a bit more money per share, so that's always encouraging. But the cash on the books looks pretty light, so they may have to do a financing here. So that location-wise, that looks really interesting. Do we have signs of divergence, structure, that kind of stuff? We can wait for that. This DPW, man, what a crazy stock this is. No real technical bottoms. This thing still looks really messy. There was a cute little W here when they rolled the stock back, and I know people that were in this thing through here. They got a nice treat on that event. Then it started to go back into free fall and made new lows. And I think, remember, we had said with these rollbacks, probably the stock ultimately wants to go back to the pre-rollback price. And I think, if I'm not mistaken, that was like 30, 40 cents a share or something. So we got down to 59. Whenever a stock gaps higher like this, of course, everybody at TRI should go, oh boy, we got to come back down and fill in the gap. And is this a massive distribution day? I don't know. Could be. They announced that, and I really like this kind of thinking going forward. How can we use blockchain to, increase profitability? So, in essence, they want to start something called monthlyinterest.com, which is going to be nothing more than following bond market investing through crypto. Interesting story, and kind of a derivative on how I think crypto plays out. Like, we should probably be concentrating on companies that could leverage blockchain technology.
There's definitely one I've been looking at. I need to still do more analysis on it, but there's one called Vital Hub, which is also a Canadian stock, which basically uses the blockchain for hospitals to connect data with one another. That's actually going. They're getting quite a lot of business, to be honest, within the hospitals.
What's the symbol?
Actually, blockchain is being used for good. So,
what's the symbol?
The symbol, off the top of my head, I think it's VHI.
VHI. Let's see what I got here. Do any of these look familiar? Vital Hub? Is that what you said?
Vital Hub Corp. Yeah.
So we'll keep an eye on him. Coming down against the bottom end of the range. It's nice cheapo. Not too expensive. If it's Canadian, that means we should probably be able to see it.
They're very communicative as well, which is something I always like is just making sure, when something happens, it's released, or like they do earnings calls every quarter, etc. So, very open company, which is always good to hear.
All right, so let's see what kind of structure this thing has. We've got 137 million shares out. Still, that's kind of heavy for a guy like me. Wouldn't mind seeing them roll this thing back. Are they actually earning any money? Yeah, they show a loss of a penny a share. So, okay, maybe we'll watch this into a year-end kind of idea for VCIM kind of names. I was just going through, I have a small list. That HUD 8, I'd actually really like to see it come back down to reload zone, fill in gaps, but this thing could very easily bot its way out here. Now we got 1, 2, 3 higher lows. So I don't know whether his move here in the short term is done or not. It wouldn't shock me if we worked higher there. As I said, that Riot looks really interesting. I don't know about Hive. I'm worried about the amount of shares out. There's DPW. I love the sort of the analogy of using blockchain to improve efficiencies. I don't know whether this is sustainable, and my hunch is if we did want to be buyers, probably have to wait for that gap to be filled in. Then I've got a couple of my little penny pieces of poo down here. They're all just sort of swimming around. We got a free position on this iMining. Really nothing to be done there right now. I'm actually a little disappointed in this blockchain K2. I think this thing should perform. Insiders are all long from these levels here. And, the chart should speak for itself. If we get up through this 30-cent area, this thing's going to take off like a rocket. But just got to hurry up and wait on that one. But, if you're not in, you might want to consider nibbles there. Maybe do your due diligence, see what's going on inside the company. And then, kind of another one of our funny little derivatives of blockchain. This Rebonds sitting right at the bottom end of its range. I suppose if a polite little W comes in here, there might be a trade. For those people that are interested in, fractals and inside bar reversals, you can see a break of this 174 high, which we did 176, now sitting 173 right now. This thing might have a little bit of a pop, just like that DPW. You can see there's lots and lots of room for this thing to run to the upside. So there's another name to consider. It is sort of summer doldrums, so be warned. We used to call it, like I said earlier, the dog days of summer. I don't know whether I really want to get too bullish of stock though heading into the fall here, or whether I just want to wait and let the carnage sort of play out. When we look at Bitcoin itself, and I went into sort of great length yesterday, I don't know whether I can get too excited about buying Bitcoins here at $10,500 for investment purposes. I don't mind the idea of us hunting trades through here, long, short, that kind of stuff. And if you happen to see, good-looking little short-term setups come in, great, trade them. We sort of did that kind of conversation through the weekend. And these W's are working away, so I do like sort of like swing trade kind of thinking here on Bitcoin. But I don't know, I guess for a stock investor, I especially with regard to these little venture cap names, I think I'd like to actually see like some weakness into the fall, and then be buying that weakness. I don't really have any sort of, oh my god, pound the table, you gotta load up on this thing. Can you please post the first BTC chart? Which one was that? Tell me to stop which one you wanted. That one? That one? That one? That one? I don't know. I'm just having fun with you guys. Yes, this one. And actually, I did this tweet up. Well, not tweet, but this one I talked lots about in the Broiler Chicken show there yesterday. So So, caveat emptor. If you can try and sneak in at or below where insiders are long on these names, I love that idea. I don't know whether it's a good idea to be chasing names after they've gapped higher. And, what I'm hearing from everybody is this HUD 8 is just the poop. Everybody loves this company, which is scary because that means to me that this thing's probably going to have another leg higher. If we just do simple things like reload zone or bot setup, let's see what we got here. So we've done 33, have not gone past 66. If we project that off of this low and then throw on the bot trade levels. So we got one low, two lows. Could we consider that a second low? I don't know. That's a tough one. I actually wouldn't mind, especially if Mr. Trump can help us out with some sort of silly tweet or something saying that he hates China again. I wouldn't mind if we could get like a third low to come in here and then us turn back up through this trend line. That would make me really excited. I might trade the bot off of that. Right now,
I don't want to be selfish, but I honestly don't mind if it just keeps going higher.
Because you're probably already long, you bastard. Okay, so that's sort of my 2 cents on blockchain stocks this morning.
Nice.
I think there are a couple little bargains out there to be hunting. I would keep a real close eye on this rebonds. If you like that rebond story, sort of luxury goods on the blockchain kind of idea. I do like this Riot name just because of the low share count, but of course, we want to see some technical breakout here. I do like this blockchain K2 company. It is a VCIMer and it's below where the insiders are long, but no real breakout signal there. I think that's probably the extent of what I see here. And then, if you want trend continuation, keep an eye on HUD 8 because it looks like it wants trend continuation. And then, like I said, sorry?
Sorry, I was just about to say, just for anybody who is interested in looking at them, just, really do your research because with the liquid stocks as well, it can be obviously very volatile, but then at the same time, just have a look at the financial statements, etc., and just have a little look just to see, is this going to zero or is this going to carry on? So.
Yeah, well, and then there, Brian, he loves shares with low share counts, right? So this is what worries me about something like Hive. With the amount of shares that they have out, I'd really like to see them roll them back. And you also notice that there's some cheeky gaps down below here that could be filled in. In fact, you could make an argument there's a gap right at the bottom here. So be careful. On names that have a shitload of stock out, you could get punished. So just be forewarned.
It says something when your biggest partner is actually dissolving all their stocks.
That's not a good sign.
as Bitcoin has then rebounded, like 4%. So it's not exactly the greatest sign to say the least.
No. Okay, so we are coming up into the top of the hour. Was there anything else in your presentation that you wanted to talk about?
No, honestly, I don't need to present. I don't need to present anything else. Obviously, the macro news for the next 2 weeks. So you've already covered the FOMC meeting minutes, which will, as you've already said, which is I believe it's on the 21st. Then the main things maybe to look at, is probably we have over the next couple of weeks is just GDP stats coming out for Germany, US, Canada, etc. So keep an eye on that. Fed chairs speaking as well on the 23rd. And then you've got the Chinese manufacturing and the Kaizen manufacturing at the end of the month. Other than that, there hasn't been any specific dates yet for other things coming out. And then, thanks again for having me on. I'll see you again in 2 weeks on Monday, the 2nd of September. I'll see everybody around.
Probably, maybe we should try and do like that Tuesday because that's going to be a holiday, right? The first Monday back in September is usually a holiday.
Okay.
But I don't see any like earth-shattering econs coming up here, like economic data-wise out of the States. What I would say, anybody who's watching is, what are the sort of catalysts for this week? I think we have to keep an eye on any bombshells that are dropped out of that Jackson Hole conference. My personal feeling is I doubt there will be any significant development through that, but the whole market is going to be poised on, does Powell say anything about lowering interest rates further at that Jackson Hole conference? So that's probably what people are going to be focused in on. Okay, we've got about 5 minutes left. Thank you very much for your contribution there, Jamie. Always love to have you on the show, and hopefully it's a nice win-win for everybody around the board. I suppose just a quick sort of overview of what I'm seeing on broader market. Gee whiz, what a coincidence. U.S. dollar index continues to press higher. If we change this to a line chart, last weekly close was another new high. Show me a new high and I'll show you a buy, all that kind of fun talk. So I certainly don't see any breakdown here in the US dollar. Obviously, Mr. Powell's commentary this week is definitely going to have an influence on the market. I think it's just slow and steady wins the race, and probably more importantly here, what are the trading partners doing? European economic data still poor, so euro. I don't see any reason to change thinking here. I think it does make sense that traders would take a shot off of this candle body low area here for a potential range trade setup. But AB equals CDs. I don't see any reason why we can't hit this 108 number. I guess 108, 109. But obviously this thing never moves in a straight line. Considering how weak the data is for this week coming into the dog days of summer, my hunch is things probably going to slow down into the end of August, beginning of September. But we'll see what happens. If we take out these lows, then the trend continuation still moves further. Anybody who did trade this tight little double top, front running the bot kind of idea, you get to move your stop to scratch on that event. And right now, there just isn't anything to get excited about on the long side for euro. Probably the biggest sort of risk, I think, in the market right now is actually this bond, gold, and Japanese yen trade. They've moved up quite a bit, and of course, I like to keep an eye on these sort of. Did I get rid of it? No, that's too bad. Here it is. The risk-off assets, they're all ticking down today. So bonds, yen, and gold are all ticking down. Risk-on assets, they're all ticking up today. So that's sort of the theme of Monday. Of course, usually we find that the prevailing trend for the week is established through the Tuesday-Wednesday kill zone. Could this be nothing more than them just cleaning up after the options expiry? Could be. But on balance, I'm a little bit, and of course, you probably listen to Brian rattling on and broiler chickens and all that kind of stuff. This gold market, the diamond pattern is just playing out absolutely textbook. So we had, rallies up into reload short zones, failed. Now tanks into reload long zones. You can see a bit of a bids coming in here. I don't think this I don't think we get any clear direction on the gold market until this resolves. So you just sort of got to keep an eye on there. But, if we zoom out on that chart, and this is sort of what worries me for the broader market, and I guess we can see it there in yen. This yen has come an awfully long way. If we just do simple reload zones, you can see where the reload zone is now. So, could we have some pullback here? Look at this big old gap still wide open there on the end. But could we have some pullback, maybe fill in this cheeky gap here on yen? I think that's definitely a possibility. We'll probably play Colleen's game at the top of value. If we accept back into value, then you can see 80% of the time we got to come back down here. So my hunch is probably in this area here, short-term support, and that's probably where 38.2s are. Yep, right in there, right against top of value. So, in the short term, I could very easily see A, B, C, D take us down into this area. And then we sort of, decide whether the U.S. dollar is really going to break out higher in earnest or not. The bond market, interestingly enough, lots of talk about yield curve inversion. For the record, I still do not believe that the yield curve has officially inverted. And interesting to see yields, of course, with the stock market racing back here and the Germans talking about throwing like $50 billion at the market in fiscal stimulus. The bonds now are thinking, okay, maybe there's a bit of inflation pressure here. But I think the damage has already been done on the inflation-deflation talk. The question really here is, does the curve actually invert? And as I had said earlier, I think it's in our best interest to keep Mr. Murphy's tool handy just right in front of us. And you can see the yield curve still says normal. Really, I might argue that this is that profit margin window. We really don't want to see these long ends, especially all out in here, because this is mortgages, this is car loans, this is long-term financing. We don't want to see that below that short-term rate. So on balance, it's still not a disaster in my opinion, and I don't think the yield curve is actually inverted yet, but that's just good old Brian. Stocks enjoying quite a nice rally here, and I'm really liking this study that I've started to do here on the stock market. And I don't know whether Riza, are you still on the call? Whether you've asked Big Daddy or not, whether he can give us an update. But one of our level 3 students subscribed to an interesting newsletter writer, and she's really big on these like 50-day cycles, 100-day cycles. And I noticed that her dates seem to work pretty damn well. I remember she had a cycle pivot there the end of April, beginning of May. I know she had a cycle pivot there around the middle of July, somewhere in that area. And I remember that he said that there's the next cycle pivot somewhere out in September. And if we sort of think about these cycle pivot points as being major tops, then what I also noticed too is that about midpoint through the cycle, that's where your sort of market cycle bottom comes in. You can see how that happened here and the market took off. I think that this bottom happened through this apex of the parabola here and the market took off. And gee whiz, and I don't know whether I have this date exactly correct. It might be off by a few dates either side. I'm not totally positive. And that's where Riza, I wouldn't mind if you do run into Adam, if you could just get him to remind us what the date was there. You can see clearly the market actually peaked on the 29th, so it's not like it's exactly right on that date. But it is interesting when this happened to be 51 bars. I'm not exactly sure exactly what the date is. But the point I'm trying to make here is, here we are, midpoint of the parabola. We should be actually thinking stock market bottom here. And if that's the case, and gee whiz, what a coincidence, 2 days in a row, gap higher, rah, 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 rah. And I'm wondering, and this might be a really interesting anecdote for a lot of people on this site, student of the market kind of conversation. Did Wall Street write all those put options actually wanting to get long stock, knowing that this was the pivot? Sometimes that does happen. So, there was a ton, like over 120,000 of these 290 puts written. They did expire in the money on Friday. So technically they were auto-exercised. What was the average right price of that option? I don't know. My hunch is probably a few dollars because these things are damn expensive. So, maybe Wall Street in itself noticed, gee whiz, look at that. They were exercised to buy stock at 290, and look how the market's sitting right at 290 right now. So if they did want to liquidate the position, they could basically do so at scratch. But I'm wondering, 120,000 contracts times 100 shares a contract, we're talking about 12 million shares of the S&P depository receipts. That's some serious money. Somebody do the math. What is 12 million times $290? We're starting to talk some serious money. Did Wall Street actually want to get long? looking for this next cycle move into this cycle pivot peak into the end of September. That wouldn't be out of the question. So anyway, long and short of it here, getting back to our just simple conversation, it is interesting, and I've been sort of, as a student of the market, been following this. There's the algo signal, there's the double bottom. Yes, we did come down and fuck with the noob stop, which is very normal. Really interesting level here through last week to get long the stock market. Lots of FU moves and stuff to really screw over the retail noobs. I think this is the trade level. But I do find it fascinating that this double bottom is technically still working. And we might start rocking and rolling now that we're through that mid part of that cycle. So we'll keep an eye on that. I'll just make a quick mention. Of course, I spent a lot of time yesterday talking about Bitcoin off the higher time frame, so we don't necessarily need to go into that conversation. But I will just sort of leave today because we're already past the top of the hour. Technically, it's interesting that this buy signal, this was a tough one here. Algo went uber bull. And I looked at this kind of almost exactly the same as the stock market and said, well, gee whiz, there is the double bottom. Now, it's interesting because that was basically right on Friday. And then through the weekend, Bitcoin melted back down, almost exactly the same as the way S&Ps did, into this level. So I was thinking that there was going to be a hell of a fight in here. But that never resolved. Market worked its way right back to this trend line. And then you can see this morning broke out. And I was publishing this chart yesterday, just wondering, oh boy, we had this consolidation, and then at the trend line we broke and all hell broke loose. So then we did the same thing through the weekend. We had this consolidation, working our way back to this trend line. And, my question yesterday was, do we break down here at the trend line and bearish bought our way down here? And probably the best way to see that is to show the tweet that I actually put out. I didn't see a lot of follow through there though, right? So, and yesterday when I put this tweet out, I even specifically said this is both for the bulls and the bears. So I had bull scenario and bear scenario on here. Had the bear dominated and we M'd out here, then I think it might have been sort of a straight line stab down into that 8,500 that everybody's looking for. And, on our higher time frame charts, we were saying, and actually the chart that I just shared with Benjamin, I'm looking for that 8,500 just as nothing more than a 50% retrace of this range. But that should happen the end of September. Maybe what ends up happening here is the market's relatively happy into that September pivot. Bitcoin is a risk-on asset now. And then the end of September, we do that 50% retracement on the sort of top in the stock market, which also should come near the end of September there. So I guess it kind of makes sense from that cycle perspective that we did not break here. That bot setup that I was just showing you a moment ago did not play out. And I think that the bull is still very much alive here. I'm not getting any new algo signals, which kind of bums me out. It's probably a cadence issue. But and I even put on this tweet, I said, we do technically have two W's working here. 50% levels here, but this is what really interested me. Notice Colleen's buddy, good old John Hoagland, is sitting there. There's the bottom of value. Do we actually accept back into value? And if we do, Colleen, how often would Mr. Hoagland suggest that we have to tag value high? Right? That trade is definitely on the table. And it's interesting, too, is, thank you, ma'am, is that's 88.6. Ian, if you're watching this later, that's your level. And, of course, that would just do nothing more than just revisit all of these candle wicks, and especially this wick. I think there's a bunch of trap bulls in there that would absolutely love to be released. So, if we do accept, and I hate to say it, but this is starting to look like acceptance, only time will tell. We now have another W coming in here. If we do accept into value here, then really I got to be starting to think that we got to go up top here and test value high. So there's a nice little sort of update there on Bitcoin for everybody. Okay, we're well past the top of the hour. I still got to do the daily brief recap, so I think we'll probably leave it at that. Mr. Mayor, what do you think? Did these people get some good value today?
Yes, sir. Love my fundamental Mondays.
All right, awesome. So why don't we leave it at that? I will bring an end to the broadcast. Thank you very much, everybody, for participating. All the best. We'll see you, of course, everybody, first thing again tomorrow morning for another exciting dose of Daily Brief. Have yourselves a great day. All the best, and bye for now.